Go to accounting paper 1 of 2, October, November 2021. The first question, so which statement is correct? The accountant prepares the trial balance and the bookkeeper prepares the financial statement. The accountant prepares the trial balance and the bookkeeper prepares the financial statement. Bookkeepers do not even prepare accounting. It's not A. The accountant writes up the journal and the bookkeeper writes up the ledger account. No. The bookkeeper writes up the journal and the accountant prepares the trial balance. No. The bookkeeper writes up the ledger account. Yes. And the accountant prepares the financial statement. Yes. The answer is D. Question 2. Which formula may be used for the accounting equation? Accounting equation is, it could be capital equals to asset plus liability. Are you with me, please?
Yeah.
It could be liability equals to asset minus owner's equity, or owner's equity plus liability equals to asset. So asset equals to capital plus liability. Do you get it?
Yeah.
So the answer is 2 and 4.
Just C.
C. Question 3. Goods purchased on credit from Samuel were returned by Ashwin. Which entries should Samuel make to record this? So there's a sales returns here, and there is Ashwin's account. So the sales returns will be debited and Ashwin's account will be credited.
Yeah.
Returning what? Sales returns.
Yeah. Because there's only the only option.
Yeah. So the answer is C.
Yeah.
Question 4. During our first financial year, a trader paid 1,800 for insurance and 3,200 for rent. At the end of the financial year, she transferred insurance of 1,500 and rent of 3,600 to the income statement. What does the balance remaining on the account at the end of the financial year represent? Insurance is prepaid,
Yes.
and rent account will be accrued.
Yes.
Clear, right?
Yeah.
So the answer is C.
Yeah.
Okay. Question 5. Lay bought goods 8,000 less 15% trade discount. She later returned half of these goods as they were faulty. Which document did Lay issue to the supplier for the returned goods? When you are returning goods, you return it with a debit note.
Yeah.
So that's the first point. Then half of the goods were returned. That's 4,000. 15% of 4,000 is 600. 600 minus the total 4,000 is the trade discount, which is 3,400 with the debit note. So the answer is B. Is it clear?
Yes.
All right. That's number 5. Did you get it right?
Yeah.
Okay. All right.
No. Yeah, I think I did it. Yeah, correct. Yeah.
Okay. Question 6.
Yeah.
What's a check counterfoil used for? It's a slip that is used to make credit entry in the bank column of the cash book. As soon as you issue a check, are you with me?
Yeah.
As soon as you issue a check to your supplier, you paid your supplier, right? Yes or no? So when you make the payment for your supplier, the check counterfoil is what you use to record. It becomes your own document, your source document, which you use in your cash book. So that is what you use to credit the supplier's account in your bank column of the credit side. Do you understand?
Yes,
you paid check, you made the payment, right?
Yeah.
It will be a credit balance on the bank column. So what is the document that you are using? You need a source document, yes or no? You cannot dry post, because when you dry post, it becomes a fraud.
Yeah.
So whatever posting you do in accounting, it has to come with a source document. So the source document for that payment is a counterfoil of the check. Is it clear?
Yes.
Well, that was question 6, which is A.
Yeah.
Question 7. Farouk sells goods on credit. A check from Khalid, the credit customer, was dishonored by the bank. How should Farouk record this?
Dishonor check.
Yeah. So the return check is the dishonor check. Will be debited. It will be debited.
Mm-hmm.
Then Khalid's account, I wrote, dishonor check will be debited in Khalid's account, while the bank will have the credit balance, because the bank is returning the check. Do you get it?
Yeah.
So we're going to have account to be debited as
Khalid,
and the bank account to be credited to be the bank. Clear?
C. Yeah.
That's C. Right?
Yeah.
Okay, yeah. Question 8. Why does the supplier offer a trade discount? To encourage bulk buying. B. Did you get that right?
Yes, yes.
Question 9. Anne maintains the petty cash book using the impressed system. Which statement is not correct? All these statements are correct. The first, I said petty cash book can be maintained by a junior member of staff. Yes, anybody can do that. At any time, the petty cash voucher plus the petty cash balance are equal to the impressed system. Yes, because at every point in time, you have to maintain the same interest amount
Yes.
in the petty cash. So it's right. The chief cashier is not asked continually for small sum of money. Yes, that's why we have a petty cash. So I don't always go to the chief accountant. So you have a small save that for a little amount of money you can just take from there. So it's C is right too. The number of entries in the cash book increases because of the large number of small cash payments. No, it's not part of it. So the answer is D. Clear?
Yes.
Question 10. A sales invoice for 800 was incorrectly recorded in the sales journal as 1,800. How does this error affect the trial balance? The trial balance will balance. The trial balance will balance.
That's the original entry.
Yeah, because it's an error of original entry. So it will balance. But it will be over that the account will be overstated for 1,000. That's just it. Clear?
Yes.
So the answer is A. Question 11. A standing order paid for rent has not been entered into the accounting records of the business. Which statement is correct? Because the payment was made automatically, no additional entries are required in the no, that's just flimsy.
They want to trick you automatically.
Automatic. Because payment was made, forget about that.
Yeah.
Entries are required in the cash book and in the bank consolidation statement. No. The entries are entered in the cash book and the ledger. So it is D. Clear?
Yes.
Question 12. The bank statement of a business had a credit balance of 2,690 on 1st of October 2021. At the date, check totaling. At that date, check totaling 850 had not yet been presented for payment. That is unpresented check. So you have the credit balance. And what does the credit balance mean? It means that you have a debit balance in your cash book.
Yeah.
Good. So if you're having a debit balance in your cash book, you have to less unpresented check.
You have to less it.
Yeah, do you understand? So the credit balance minus unpresented check is 1,840 debit.
The debit side, yeah.
Debit. So the answer is
the cash.
clear, right?
Yes.
Question 13. A trader has purchased new business. Yeah, a trader has purchased new business premises. What are examples of capital expenditure? Capital expenditures are expenses on or spending on non-current assets. So cost of heating and lighting the new premises, it's a revenue expenditure because every month you pay for heating and lighting. Cost of purchasing the new premises is a capital expenditure. Legal cost of purchasing the new premises is a capital expenditure. Office furniture adds value to the premises. Yeah. It's also capital expenditure. So 2, 3, 4 are capital expenditure. So C. Question 13 is C. Question 14. Did you get it right? No. They said 2 companies each purchased a motor vehicle for $10,000 at the beginning of year 1. Company G used the straight line method of depreciation at a rate of 15%, while company H used the reducing balance method at the rate of 20%. What was the difference in depreciation charge between the 2 companies for year 2? In year 1, we have 10,000 multiplied by 15 over 100, which gives us 1,005. So for G, because it's a straight line method, it maintains the same charges on depreciation. Yeah. So year 1 is 1,005. Year 2 is also 1,005.
That's 3,000.
Do you get it? So year one is 1,005 minus 10,000, which is 7,005. Year 2 is 1,005 minus 7,005. Not just 3,000, please. Year 1 is 1,005 minus 10,000. The net book value remains 7,005.
Okay.
7,005 minus 1,005 gives you 6,000 for year 2. Yes.
Oh, 10,000 minus 1,500, right?
Yes, that's 8,005. Sorry, that's 8,005.
Yeah, that means 7,000. Yeah.
Yeah, 8,005. Yes, 8,005
minus 1,500.
That's 7,000. Yeah, thank you. That's 7,000.
Yeah.
So for what's the other girl? Or the A for G, it's 20% in year 1, which is 20 over 100 multiplied by 10,000, which is 8,000.
Yeah.
So the difference is 500 for year 1. So year 1 for G and H is 500. Do you get it? And year 2, 20% of 8,000 is 1,600. 1,600 minus 8,000 is 6,400.
Yeah.
So the difference in year 2 is 600. Do you get it? 6,004 minus 700. 7,000 is 600. So 500 minus 600 means that H is having 100 more than G. Do you get it? Do you understand or not?
Yes, yes.
All right. So 7,000 for year one, G has more,
Yeah.
which is 500. In year two, there's 600. So 600 and 500 gives us 100. Is it clear?
Yes.
So that's for question 14. Question, which is B.
Yeah.
Question 15. At the end of the financial year, we had prepaid rent of 1,500. How should she record this? A prepayment is a credit. You credit the rent account, and it will become, because it's a prepayment, the rent account will be credited at this point in time, but you have a debit balance going forward for the next financial year.
Yeah.
Do you get it? You credit rent account,
The next year will be the.
it will be a debit because it's prepaid. Clear?
Yes.
Because it's an expense, you credit it first. So we'll go
So
to
it's B, right? In is B.
15, year B. Question 16. After preparing a draft financial statement at the end of the first year of trading, Lucy discovered two errors. Damaged inventory. Damaged inventory has been valued at cost price of 340. Damaged inventory has been valued at cost price of 340. It was expected to sell for 180. That's the first point. The other one is that 100 items which had been expected to sell for 12 each had been valued at their cost price of 7 each. Carriage was of $1 for each item had not been included in the cost. So what was the effect of this error on the gross profit? So first we have our carriage word. Our carriage word is 1 multiplied by 100, which is for 100 goods, which is $100. That's carriage word. But now let's go back to the cost. They said it was supposed to be sold for $12, but it was sold at the cost, original cost. Do you get it? So that means they sold it for $7 each. Do you get the point? So $7 multiplied by 100 is 700.
Okay.
So it was sold for 700. So that is 700 minus 700, that's 0. Nothing was gained there.
Yeah, yeah.
There was no profit nor loss. Do you understand? So I think you are getting my point.
Yeah, yeah.
So our carriage word is $100, and the cost of inventory was expected to be 340, but now valued, the NRV is 180. So 340 minus 180 gives us 60. Give us 160.
60 it is.
No, 340 minus 180 is 160.
Okay.
The value of the inventory now, the NRV for the inventory is 180.
Yeah.
So 340 minus 180 is 160.
60, yeah.
So 160 is what you take away from your carriage inward, which is 60.
Yes. It's
So
overstated.
overstated, yes. So that's question 16, which is A. Clear.
Yeah.
Question 17. Which is an advantage and disadvantage of operating as a sole trader? So if you are operating as a sole trader, you gain all the profit. And if you are operating as a sole trader, you bear all the risk. So the answer is A.
Yeah.
Clear, right?
Yes.
Question 18. What is shown in the capital and liability section of a statement of financial position of a business? The statement of financial position, they're talking about capital and liabilities. Capital and liabilities is traced to those that have put money into the business that are not the owner of the business, or that's the business that we're talking about, those that have put money into the business, either through capital or through loans. So capital and liability tells us is an account that shows us where the money is coming from. Do you get the point I'm making here? Assets, we already know what assets is. Assets are the resources that belong to the business.
Yeah.
Capital are resources that belongs to the owners of the business, but the business is using. Liabilities are debts to the third person. So capital and liabilities are put together to be able to trace from where they are coming from. Do you understand?
Yes.
So the answer is D. Clear?
Yeah.
All right.
Because the assets is equal.
Asset is the owner, asset is for the business.
It's basically assets equal to capital plus liability.
Yeah.
So that's why.
So question 19. John maintains a full set of accounting records. Why does he also prepare a statement of financial position? He prepares a statement of financial position to summarize what the business owns and what it owes. That means you're talking about understanding the assets and liabilities of the business.
Yes.
Is it clear? So yeah, it was statement of financial position shows the summary of assets, capital, and liabilities of the business, which is the same as what they said here. D. Question 20. A sole trader paid off the business overdraft, showing his own using his own personal funds. How did this affect the statement of financial position? Liabilities will decrease.
Yeah.
Capital will increase. Assets will have no effect because it is capital. Is it clear?
Yeah,
So the answer is C. Question 20. 21. And why is the sole trader making an annual profit of 24,000? He decided to admit Dilip.
No, that's 22.
Oh, sorry.
Okay.
As he found that he needs, 21. As he found out that he needed help to run his business, he decided to take a partner rather than employ an assistant.
Yeah.
Why did he decide to take a partner? Yeah, he would have decided to take a partner because one, an assistant would not interfere with how the shop was on. No, it's not about that. An assistant would not share the risk. An assistant would not share the risk. Why did he decide? Yes, an assistant would not share the risk. And also, a partner would introduce some additional capital. Yes, a partner will introduce some additional capital. A partner will take a share of profit. That's a disadvantage. So the answer is 2 and 3.
Yes.
Do you understand?
Yes.
So he's choosing a partner because an assistant would not help to share the responsibility of the risk. He's choosing a partner because a partner will add capital to the business, will inject capital to the new business. So the answer is C, question 21. Question 22 now. Yeah, and why? And why is a sole trader making annual profit of 24,000? He decided to admit Dilip as a partner. They agreed that Anwar would receive a salary and profit and losses would be shared equally. The forecast and provision account for the partnership first year of trading is profit for the year 50,000, salary for Anwar 10,000, profit available for distribution is 40,000. So by how much will Anwar's total income increase? So the salary for Anwar is 10,000. The profit will be available for profit distributed equally will be 20,000 for Anwar. So Anwar will be making 30,000. The previous year, Anwar made 24,000.
Yeah.
Now Anwar is going to make 30,000. So the difference between Anwar's income before and now is 30,000 minus 24,000, which is 6,000. So the question is about by how much will Anwar's total income increase? Anwar's total income would increase by 6,000.
Yeah.
Because before now he was making 24,000. As soon as he got a partner, which in person of Dilip, the profit made was 40,000, which they have to share equally. And Anwar would receive a salary of 10,000. So 10,000 plus 20,000 gives 30,000. 30,000 minus 24,000, 6,000. So the answer is B. Question 23. BCD Limited provided the following information: ordinary shares, retained earnings, and debentures. How much was the equity and the capital employed? Equity can be ordinary shares plus retained earnings. Then for capital employed, it is ordinary shares plus retained earnings plus any liabilities, which can be long-term liabilities like debentures. So all these things are part of our capital employed. Do you get it?
Yes.
So equity is just the ordinary shares and retained earnings, which is 500,000. Are you with me?
Yes.
Then capital employed is ordinary shares plus retained profits plus debentures, which is 670,000. So the answer is D. Clear?
Yeah.
The question was repeated in the last question too. The same question. Question 24. The issued share capital of CD Limited consists of ordinary shares. Retained earnings were 86,000 on September 1, 2020, and 88,500 on 31st of August, 2021. The company made a profit during the year of 26,000 and made a transfer to general reserve of 5,000. What was the total ordinary share dividend paid during the year? So dividend is opening retained earnings plus profit during the year minus closing retained earnings minus general reserve. Do you get it? Do you get it or not?
Yes.
Okay, so our opening retained earnings is 86,000. You add the profit for the year to it, which is 26,000. You less closing retained earnings and the general reserve. So the answer is 18,500. A. Clear. Question 25. A sport club was formed on 1 August 2020. During the year ended 31 July 2021, the club purchased equipment costing 5,000 paying by check. It will be recorded in the receipt and payment account as bank.
Yeah.
And statement of financial position as non-current assets.
Yeah.
Is it clear? So the answer is B.
To be recorded in income and expenditure towards the depreciation, that's all,
Yes.
right?
Yeah. But for this is a cash period. It will be recorded here. The balance goes to your income statement. The balance of your receipt and payment account goes to your income and expenditure account. And if there was depreciation, it will go to income statement. Because the income statement talks about non-current asset, no, talks about non-cash items. But the receipt and payment talks about cash items. Is it clear?
Yes, yes.
$26, right?
Yeah.
A sport club has 100 members and the annual subscription is $60. Did you get it? No. During the year ended 31st of August, 12 members paid their outstanding subscription from the previous financial year. 10 members paid their subscription in advance for the following year. On 31st of August, 2021, subscription for the current financial year were still outstanding from 8 members. What was the total amount received from members during the year ended 31st of August? They are saying we should calculate the total amount received during the year of August for all subscriptions. The first thing is that the total subscription is, we have 100 members. We have 100 members, but 8 was outstanding. So that means 92 members would have paid. So 60 multiplied by 92 is 5,520. That's the first one. The second one is 60 multiplied by 12, which is 720. And the third one is 60 multiplied by 10, which is 600.
We had them together.
We have them. That's the total subscription collected. Some are prepaid. But the question is saying total amount received from members during the year. Total amount received from members. 92 members paid. Yes or no?
Yeah.
92 members paid. That is 60 multiplied by 92. 12 members paid their outstanding from the last year, which was accrued. It's part of what they paid this year. It is 60 multiplied by 12. Then 10 members paid for prepaid,
yeah,
which is 60 multiplied by 10. So that's 5,520 plus 720 plus 600. That's 6,840. Is it clear now?
Yes.
So the answer is D.
Yes.
Question 27. Beth provided the following information. Net assets and her drawing for the year was 3,000. What was Beth's profit or loss for the year? Here we have the closing net asset minus opening net asset, which is minus 4,000.
Mr. Drawings, we listed during the year, and we added at the end.
At the end, no, here, this is during the year, you add it.
You added?
Yes.
Oh, you don't list it?
No, you don't. At the end of the year, you less. Is it not at the end of the year that the financial year, it's over?
Oh, yeah.
Do you get it?
Yes, I get it.
So it's during the year. At the end of the year, it will be taken away because at that point in time, profit would have become accumulated.
Yeah.
Do you get it?
Yes.
So it's net minus closing minus net, which is minus 4,000. Minus 4,000 plus 3,000. That's minus 1,000.
Which is A plus.
Yeah. Minus 4,000 plus 3,000. So that's minus 1,000, which is a loss. Is it clear? A. Question 28. Did you do question 28?
I did it, but I did it wrong.
Okay.
Yeah.
Russian sales for its first year of trading were 55,000. Its gross profit margin was 20,000. The closing inventory was 3,200. What were the purchases for the year? First, what is gross profit margin? Gross profit margin is 20 over 100 multiplied by sales, right?
Yeah.
So 20 over 100 multiplied by 55,000 gives us 11,000. So that's our gross profit margin, our gross profit.
That's the gross profit.
Yeah, the gross profit is 11,000.
Okay.
So now our purchases. Purchases is sales, because normally you take sales away from purchases. You take sales away from cost of sales.
Yeah.
Yes or no? Cost of sales is part of purchases. So sales minus gross profit, because gross profit, cost of sales minus sales gives us sales minus cost of sales, give us our gross profit.
Sales minus cost of sales, yeah, gross profit.
So sales minus gross profit, closing inventory was supposed to be taken away from purchases. Now you add it. So our purchases will be sales minus gross profit plus closing inventory. Do you get it?
Yes.
So our sales is 55,000. Gross profit now is 11,000 plus closing inventory.
There's not even opening inventory because it's
And we
the
don't
first-
have. It's okay. We don't
it
have.
was the first year of trading. That's
Yes, we don't have. No, we could have, but in as much as it's not yet, no problems. If there were, if we had opening, if there was opening inventory,
it. Will be
we
easy.
less.
We're less closing and we add co-opening, yeah.
But it's not going to give us. We need purchases.
Yes,
Do you understand?
yes, yes.
Is it clear, please? Do you get it?
Wait, if we have opening, we'll do the same thing, but we're less opening
With less opening, yes.
and we add closing.
You add closing.
We do this. Yeah, I get it.
Okay.
Yes.
Is it clear?
Yes.
So that's 55 minus 11,000 plus 3,200. That gives us 47,200.
Yeah.
Is it clear?
Yes.
So the answer is
Indeed.
D. Question 29. Right?
Yes.
They said, which information is required to calculate the return on capital employed for a sole trader? ROCE is operating profit divided by capital employed multiplied by 100. That is the formula for ROCE, return on capital employed. Operating profit divided by capital employed multiplied by 100. That is ROCE. Now, what are the items of capital employed? Our items of the capital employed are the ordinary shares, retained earnings, owner's equity, and long-term liabilities.
Capital employed. Yeah, long-term debentures, yeah.
Yeah. Is it
No way.
network? But I think it's continuous.
You're telling me you didn't.
No, it went up. The network went up, but it came back.
Okay. I thought it was like
No.
not because.
No. I'm just going to share the screen again. So we continue.
Yeah,
Is it clear now?
it is much clearer.
Yeah, we go to question 30. Liquid, they said, yeah, question 30 now, right?
Yeah.
Okay.
30, yeah. It's okay. Yeah, 30.
They said, which is the best indicator for the liquidity of a business? The liquid ratio.
Liquid ratio, yeah.
B. Question 31. A business provided the following information about its gross profit margin. Year 1, 40, year 2, year 3. So each year that passes by, the gross profit margin reduces. So gross profit margin could fall if expenses are high or if the selling price is low.
Expenses.
Yeah, if your expenses are high, your gross
margin.
profit, yes.
Expenses not included in gross.
Oh, sorry. If
Cost of sales.
cost of sales, sorry, I wanted
Yeah.
to say cost of sales, sorry. If cost of sales are high,
Yeah, cost of sales are higher.
yeah, cost of sales.
Gross margin.
Cost of sales are increasing or selling price is decreasing. That's what I'm sorry. Thank you for telling me that. So for gross profit margin, it means for gross profit margin, if gross profit margin is falling based on what we have here, year 1 was 40, year 2 was 38, year 3 was 35. So if gross profit margin is falling this way, it would have meant that the cost of sale or the cost of production or cost of sales is increasing or the selling price is reducing. So the answer here is D. Selling price is decreasing. Question 32. Sam and Rob each own a trading business. The income of each business is solely from the sale of goods. They provided the following information for the year ended 30 June 2019. Return on capital employed, gross profit margin, current ratio. Which statement is correct? Rob will find it easy to pay his current liabilities. No, because his return on capital employed is less. So it's going to be difficult for him to pay his current liabilities.
Yes.
That's the first point there.
It doesn't have that
Liquidity too.
yeah, liquidity or current. Yes.
So that's the first one. The second one, B, they said Rob's expenses are a higher proportion of the sales. Let's check. Rob's expenses, yeah, he has gross profit. The gross profit margin was 30, but the net profit margin is 12%.
Yeah. Okay.
So that means look at it.
Yeah, I'm saying.
For Sam has less gross profit margin, but has better net profit margin than Rob. It would have meant that Rob's sales is a higher proportion of his expenses.
Oh, yeah.
Do you get it?
Yes, yes.
Because his sales gives the gross profit. That means he has more sales, at the same time, he has more expenses. That's why his net profit margin is less.
Yes.
Do you get it?
Yes.
So the answer is B. Question 33. Question 33. Are you there?
Yeah.
He said, why would the owner of a business want to see his financial statement at the end of the year? We want to assess the performance and the progress of the business, which is part of it, to determine the market value of the non-current assets. No, because you're not supposed to determine the market value of the non-current asset if you are not disposing them.
Yeah.
So there's the principle of going concern. So 2 is not part of it at all.
Yeah.
Business should be run as if they will continue to be forever. Do you understand? So if you are talking about the market value of your non-current asset now, do you want to sell them? Do you want to dispose your assets?
No.
Do you want to close down your company?
No.
So 2 is not part of it. To make informed decisions for the following year, yes. It is 1 and 3. Is it clear?
Yes.
So question 33 is B. Question 34.
That's one day's question.
Charlie is a car dealer. Joe wanted a new car and went to Charlie's car showroom. On Monday, Joe took a car from a test drive and decided to buy it. On Tuesday, Joe arranged to pay for the car by check. On Wednesday, Joe collected the car and received an invoice. On Thursday, Joe's check was cleared by the bank. On which day was Charlie able to account for the profit of the sale? On Wednesday. Why is it on Wednesday? It is on Wednesday because that was the day Joe accepted the liability.
That was the day the transaction went on.
That was the day he accepted the liability.
I accept.
Do you understand?
Yes, yes.
Yeah, transaction happened. Transaction could happen on the phone.
Oh, yeah.
But remember, we talked about the matching concept, right?
Matching concept.
Is it matching of no, prudence,
Yeah.
where you must not calculate your assets. You must not calculate your profit when it is not ready.
Yeah.
Remember that?
Yeah. That's prudence. Yeah.
It's prudence.
Yes.
You must not calculate your profit if the customer has not accepted the liability.
That will overstate.
Huh?
Overstate profit.
It will overstate your profit, yes.
Yeah.
It's not even normal. The principle of accounting does not accept it. That's why we have prudence.
Yeah.
Do you understand?
Yes.
So this day, on Wednesday, is the day Joe accepted the liability. And he received the invoice.
Yeah.
Because it was on credit. The check has to clear the other day. Do you get it, sir?
Yeah.
An invoice was given. If Joe paid cash, he would have received a receipt, not invoice. He received an invoice because he has not paid. It was a credit. He bought on credit. A check has to go on clearing before the amount is being debited or credited to Charlie's account, which was the next day. Do you understand?
Yes.
So the day Joe accepted the liability is on Wednesday, and that is the day Joe is liable to pay. And the last question: which accounting objective requires the financial information is provided in time for a decision to be made? Relevance. The principle say that whatever information we need, it must go in line with time, so that we will be able to use it for what we need to use them for. So it has to be relevant.
Yeah.
So the answer is B. Done.